Hey, everybody. So we are live. Now, we're just simply waiting for this number, and then we're going to stay for the Fed as well. Anything under or anything over 50 basis points, and we're going to have an issue. So just keep that in mind. It's the first piece of data that we are looking for. Okay. That is the very first piece of data that we're looking for. And that's what we're going to have to focus on right now and just wait for it. There's very little to do. Buying in front of this, this you could run up here and then just reverse. So it's basically a crapshoot. Okay. And that's how you have to look at it right now. So let's just watch and see how it goes, and we can go from there. But I don't see the need to chase here. I certainly don't see the need to, overreact. Just let it go. We have about 3 minutes here, and then we'll go from there. Okay. So do I think that this leaked? I don't think I don't think this part of it is going to be any big surprise. Let me put it to you that way. I don't think that it leaked, but I don't think any part of this is going to be a huge surprise. So, okay. All right, so we're already starting to move. We're starting to get some action. So far, nothing yet. Absolutely. We're just sitting around waiting. I don't know that there'll be any surprise with Powell speaking. I think the surprise really is going to be how he phrases this. So far, we're selling straight down. So news obviously has hit. Give me a second to just confirm it. But we're going straight down, 50 basis points. We're selling straight down. Now, we shouldn't really be selling down on that. So we really should not be selling down on that at all. So, you could see a bounce here. We're going to just have to watch this super, super closely and see how this acts. But to me, this just seems like a little bit of a overreaction, to say the least. So let's just see how this goes, and we'll go from there. But to me, it just seems like a little bit of, there's maybe an overreaction here. And we're just going to see how this plays itself out. That's exactly what we were expecting. I'm not really sure why the sell down, and go from there. But I'm just watching very, very carefully and, going from there. But I'm not really sure why the sell down on that news, unless there's something in his comment. But I'm not really sure. So we'll see. We'll see how this goes, and we'll go from there. All right. But I do like this, and I do like what I'm saying. So let's just see how it holds. Let's see if it holds here. If it doesn't hold, right now, everything's just kind of bouncing the same exact way. I really don't see anything, crazy that you would have to do. Maybe you're going to sell down on this. I don't know. It sure seems it for a moment here. So I'm just going to watch this like super, super closely. But, right now I'm not doing a whole heck of a lot. We're just watching this play itself out. Okay. So I think that you're trying to see if you're going to catch here or not. You're not even starting to catch yet. It's actually getting worse, not better. So you're down about 2%, but we're going to have to see how this holds up and if it does turn or not. Right now, it's not. You're just in free fall. So just stay out of the way for now. See how this goes. And then let's get into what he has to say as far as language. Let's listen in.
Just 1.6%. Unemployment ends next year at 4.6%. That's 0.2 higher than they had forecast in September. The same for 2024. Inflation remains elevated, the statement says now, with no acknowledgement of yesterday's decrease in the CPI. The Fed uses PCE inflation. The median forecast is that will fall to 3.1% by the end of next year, although that is higher than they saw in September. They saw 2.8%. It drops to 2.5% in 2024, 2.1% in 2025. Core inflation next year falls to 3.5%, up from September's forecast of 3.1%. The decision unanimous. So a much more hawkish Fed, at least coming out of the statement, than we had anticipated.
Thank you.
Yeah, I don't really view it as that hawkish. I mean, it's pretty much what they thought they were going to say. So let's see how this goes. I don't really see a sense in. I don't see anything here that's got me. I don't think I see anything here. It's got me like really nervous, to be completely honest. I'm just listening in right now.
It is what we heard from Hansius over at Goldman, from Hollenhorst over at Citi, and from Gapen over at Bank of America.
So we're just trying to see if we're going to hold in here or we're not going to hold in here.
4.9% is not the same as 5, and 5 is not the same as 5.1.
Well, we're just watching how we're acting. I don't really see anything. We're starting to bounce a little bit. Let me just lower this, and then we can start getting into this a little bit. So I don't see anything that was that bad. I would not be surprised if we actually catch. Let's see if we actually catch here a little bit. I don't view this as just an absolutely awful report, at all. So I'm really kind of curious how this plays itself out. But I think it's kind of naive to think that they were going to be, that they were going to kind of go out there and be like real rosy on this. I mean, I didn't really expect that. I expected them to be, not, let me rephrase it. Like, I just didn't expect them to be like, oh, hey, everything looks great. So let's just see how this plays itself out in here. And we'll go from there. But overall, what are we doing? We're just kind of hanging in there and bouncing around. I don't really see a real reason to do a whole heck of a lot here just yet. I'm still watching. Maybe his speech is going to put more color on the market. So far, it's really not done a whole heck of a lot here. We just kind of bounced up and then just sitting. So it's very little to say until he starts speaking, and then we'll go from there. That's not ideal that you're starting to cut down here. You should start bouncing and holding in here. You shouldn't be cutting these under. So be careful of that. No matter what system you're doing or how you're trading this right now, you just want to make sure you're using stops. And let's watch how this acts, right? Maybe this bounces. EMPH right to VWAP, mRNA straight down, and then found some support, right? Apple, you see the sell-off, and then you found some support. But this is an H, and I'm not really crazy about the H pattern. So I really want to see some support come into these names, and I'm just not seeing a ton of it yet. Matter of fact, I'm seeing the opposite. I'm seeing some weakness on some of these. So let's just see how this goes and see if we can get a pop higher. And then if we can get that pop higher, you'll probably see money come in. And just focus on the names that are moving. So, right, you're starting to see some of these names already start to move higher. And let's just see how that goes. Okay. So that's what I have. Let me see if I have questions for now and then go from there. It's all about the speech, right? So it's all about the speech. I mean, that's where you're at right now. So Tesla's weak. That's not surprising. The weak ones are staying weak. SPY is holding that 4086 level for now, but just watch watch Microsoft. Make sure that we don't form an H there, and watch the SPY. But these things are starting to try to close higher here. So we're going to want to watch that. And there goes mRNA pushing a little bit higher, right? So maybe that gets up to that level, that 214.22. And we're just going to have to watch that really closely. Okay. I mean, and right now you don't know what the speech is going to do. We have no idea how that speech is going to go. Is he going to be bearish? Is he going to be, super bearish? Like we just really don't have a clue. So, and from what I'm seeing, I'm seeing weakness. So just, stay out of the way until we figure this out a little bit here. But that's really what we want to just kind of pay attention to. I'm really just kind of curious about how ugly some of these names could get. It looks like they can get pretty ugly here. And there you go. So what you don't want to do here technically is you don't want to take this out, because that's going to set up a whole other wave of selling if you take that out, right? So just be careful here now. Just let this all settle in before start adding to other names or considering other names. You got to let that play itself out and see how this goes. And what I would do is I'd focus on the names that did not break lows yet. Like we didn't break a low here. So if we bounce on those names, that's what you want to focus on, right? Names that have not broken those lows yet. Obviously, Microsoft's pretty close to that already. You have a $2 move in a very short period of time. So we just really want to see what they come out and say, but that's pretty negative. So that's all you can really look at for now. There's not much more to say about it. So we're just gonna have to watch it. But I'd be really careful just randomly shorting into this, but we'll see. So nothing yet from his speech, nothing there yet. He really hasn't gotten into it yet. Let me just take a look, see if there's anything here that I think is worthwhile mentioning. Yeah, Apple right to support levels. Yeah. So are you going to break these H's and then are you going to hold them, or are you going to follow through? Right. So.
What I was surprised is how big the dispersion is as we get out further.
3-1 to 5-6 and 24.
Right. I mean, John.
We got to just keep watching here.
What really is striking to me is.
Okay. There's very little to do here. Right. The most important thing is don't overtrade this. Let this settle in. Let him speak. If you go short here and he comes out and he says the wrong thing or the right thing, in my case, considering that I want the market to go higher, this is just going to rip. And it's done it before on his speech. So just watch how we're acting. So far, if we just talk technically, and I'm going to leave my levels in, but if you just talk technically, so far you have an H. Now, if you take out that low of the H, you might go lower, right? So if you take that out, you can go lower there. So you're going to have to really, you're going to have to watch that, because that's when it starts getting ugly. And I don't think that that's going to happen, but you're going to have to just be really careful there of that. I mean, that's a big move down if that goes. So just see how it holds here and go from there. But SPY's holding in there. You're holding the line. So there's very little to do or to say so far. Just keep watching. Tesla did not crack new lows. mRNA did not make new lows. These are the kinds of names you want to look for, right? What's not making new lows as the market rolls, and kind of go from there. It doesn't mean that he's not going to say something that sets the market off. But what I guess my point is, we just don't know what he's going to say. So we just really want to, we just want to see that. But if he says the right thing, the market's going to rip. And, I'm just going to tell you, that's my opinion of it. Now, I don't really see the bond market doing a lot. Do you? I mean, I really don't see treasuries falling out. I don't see, okay, so they sold the yield a little bit, but that's not really crazy what's going on there. So I don't really see anything, super out of whack here yet. Let's just keep going through it and get ready for his speech. But I don't have anything out of whack yet at all. And again, what you're doing is you just want to sell into strength because you don't know, what he's going to say. I'd be really surprised if we can't see some kind of rally up to VWAP before he actually speaks, but maybe we're not going to, which is kind of odd.
4.3%, still nonetheless not massive moves considering
Yeah.
how much some of the projections went against market expectations. Let's bring in Diane Swan, Chief Economist at KPMG. Diane, from your vantage point, is it notable that the market is not buying what the Fed is selling and that they're still?
Yeah, I don't really care what he has to say. Just waiting for his speech to start. And you're kind of seeing this, right? You're kind of seeing we're rallying, we're kind of pushing up, not really, but it's bouncing around, kind of anticlimactic, to be quite honest with you. I mean, certain names are acting very well. You're seeing, people buy the names they want to buy that have nothing to do with the market, right? That really have nothing to do with what we're seeing here. But let's see if we can actually push here a little bit. All right, see how that goes. See if we can push through this market and just push just a little bit here, but not really crazy about this bar. So we'll just keep watching, see how it goes. Starting to move a little bit more. So let's just see. Right now, I just don't see a reason to do a lot. Let me just check in the room, see if we have anything there. That drop, VIX is spiking. Let's take a look at the VIX, see what's going on there. So the VIX has been a really good indicator of where we've been at. So if we take a look at the VIX, what I would say is you're probably not going to hit new lows until you break that, right? So if we look back at what happened with the VIX here, right, and we overlay that with the SPY here, take a look at this. I'm talking fast because I'm doing trades and I got a lot going on. So, and I'm also in the room. Okay, so I'm not really sure why you're giving me this nonsense, but you are. But what I was going to point out is this. So here you are. All right, I'm not getting this the way that I want it. Point that I'm getting at is here's the VIX. Okay, and here's the VIX, right? These peaks, see these peaks right here in the 13th? Now go look at the SPY. Right? They fit perfectly with it. So I don't think that you really have to worry about that. Now, all we did here so far was gap fill. I mean, we really didn't do a lot yet. So just FYI, we really didn't do a whole heck of a lot. So just keep that in mind. We're just bouncing around right now. I mean, so far we have one 15-minute bar that's down. I'm not saying it can't get worse. Of course it can. And we're going to have to watch that really closely here and watch how this plays out, right? But I would just be super cautious. And let's see what happens when he actually starts speaking. Right now, it looks like we're gapping down again, or they're attempting to gap us down. But I'm going to just watch this VIX and see the VIX spiked a little bit there, and just saw some selling come in. So we're not falling out of bed, and I'm not really seeing major selling in some of these names. Now, if you were going to see selling, you're not seeing anything in that team. All you did was form a doji. All we did was fill the gap on the SPY. I mean, we really haven't done anything yet, right? There's EMPH. It's kind of trying to move higher. Apple, which came right back down to the 142.67 level, right? Which, you're right here, right? So not exactly the worst thing in the world. So I don't think there's a reason to absolutely panic here yet. mRNA, what are you down, $1 now in the from the high? And now mRNA is already flipping, forming a flag, getting ready to flip the break. So this is your breakout bar. right? So you just want to watch that level and then watch how you act on that level and then go from there. Okay. That's what you want to do. You just want to watch this and just see how it acts right in here. Okay. And then kind of go from there. That's really what your focal point is. I'm watching this as well, but this is going to move more with the market. I'm sick of the talking heads. I wish that he would just come out with the speech at the same time. It's exhausting. To me, talking heads on the speech that went there 15 minutes. You know, these could be H's, so you're gonna have to watch because it can get ugly. But let's see what happens here. I'm starting to roll a little bit more. Nothing. You're not really going anywhere. It's pretty obvious that you're waiting for him to speak. So let's give it a couple seconds here. Oh, that's nice. So that popped through for us. Okay. So we're just going to see how this acts up here. We're going to watch this 214.91 level. That'll be the next level to watch. Now, then we'll go from there. But I don't see anything here yet that's, again, I feel like I'm repeating myself, but I kind of doing it on purpose. You're hanging right in here. It's 50 basis points. They're talking about the language. The language is the language. I mean, I really don't view anything awful. Core PCE at 3.5 versus 3.1. You know, so they see core PCE a little higher than they first said. They see inflation a little bit higher than they first said. And I don't really view that as like the worst thing. I mean, that's not rocket science, right? That rates that they were way off. I don't think a lot of people thought that inflation was going to be 3 or 2.5% next year. So only 2 policymakers project Fed rates under 5% next year. So they're leaving the door open for 50 basis points. I'm just going through the notes, seeing if I could find something that is really bad. But I don't really have anything that's just, that's awful here. I really don't. So, just watch and we'll go from there. But I just don't see anything that is really troublesome here yet. So, and a lot of it's going to be dependent upon his speech. So we'll just see where that goes from there. We'll go from there. You're seeing very little action here. Let's see if we have questions that I can answer. I'm done. I'm not waiting for Pal. That's kind of funny. Yeah, I mean, there's no reason to it. Yeah, I like buying these pullbacks. I do. I like buying these pullbacks. That's just how I trade, though. I mean, everybody trades differently. Most people are not going to look at this and want to buy blindly into this, right? I don't mind doing it, but I'll do it with a little bit less money because you look at these levels and essentially, if he comes out and says the right thing, you're never going to see these levels for the rest of the day. So it's worth putting a little bit of money to work. You don't go crazy into these sell-offs, but you watch because, you're starting to see some things here where we're holding a little bit, right? So maybe you start putting a little more money to work, but you really have to see what he says, and then how that's received. because that's really going to be the, the rub, and kind of go from there. So there's not much more, to say or do until we see, what he says. If you have positions on and you're uncomfortable, you should probably consider, do whatever you want. But if you're uncomfortable right now, it's a coin toss, right? I mean, it's really a coin toss. So, this is either going to go up 1.5% or down 1.5%. I mean, that's really what you're looking at here. So, and I really have no idea how it's perceived. I would think it's going to be perceived as positive, is how I'm leaning. But I have to look at what's going on, right? So if I focus on what's going on so far, we have come up here and we've hit a new high on the VIX. But I think that's kind of interesting, isn't it? So we hit a new high on the VIX, right, from that 1209 number, right? And here, but we still haven't, right, reflected that yet. So maybe there's some weakness coming in the SPY. So let's just watch that, see if there's weakness coming in the SPY, but go from there. And we'll see. But I don't see I don't see that reason to panic. We'll just keep watching and waiting. That's all we can do here. Okay, so Fed swaps did move to upgrade. A 50 basis point rate hike is possible in February. So, we're going to see how that plays out. That's pretty negative. If that the Fed swaps market moves like that, that could be adding to pressure on the market. That's for sure. That's not really what we wanted. So let's see if he comes out and explains that a little bit, because obviously the bond market is looking at Fed swaps and they see something that they're not really crazy about. So let's see how this is. Let's see how this is perceived, and let's see how this is. See how this is handled. But that's definitely not something that is ideal, that the market feels that way. I didn't really want to see Fed funds futures move. That could add to some pressure on the market here. So let's just watch again and see how this plays out. So far, very little has changed between that and the first 3 minutes. But the VIX did spike up again, but it is rolling already back down. And, the bond market's not really doing much on the long end. Now, the 10-year did start ticking up a little bit more on that news. And that's what you're going to want to watch. I know people say don't chart it, but I chart everything. So I'm going to want to watch this. But overall, I see them kind of walking us down on some of these leaders, which is not great going into the speech. So we're going to kind of want to watch this really closely. Okay. I'm not going to be in a big hurry here. I'll tell you, I will not be in a big hurry to short a lot unless he basically comes out and confirms that he's going to raise what he's, 50 basis points. But other than that, we're just going to have to see how this is perceived and go from there. So, yeah, I mean, you're not seeing a lot of lift here at all. You're just stagnant until he goes. So we have him in 6 minutes. But let's take a look at Tesla for a moment. Let's look at the daily RSI. See what's going on there. See what we're dealing with. Let's get rid of this and go RSI. Yeah, I mean, that's pretty bearish, isn't it? So what you're seeing here is you're seeing that we actually have a lower low and we haven't even caught up to it yet. So you're going to want to if you go back here, right, you can actually see this a little clearer. So if you go back there, you're going to be like, well, maybe that's not as bad. My concern with that is, you see how I peaked here and I peaked here on the RSI for the person that asked this question. I'm peaking on the RSI and I have a higher low. So that's definitely a concern of mine. I would watch this downward trend line very, very closely here. And I'd watch what's going on here really closely. So, but let's see how this plays out. It's definitely not, if I was looking on the long side, it's definitely not one that I would be jumping into right now. There's much better ideas. And you really just want to watch these key levels. So far, you're just kind of bouncing around. You're not really breaking down completely yet. And I'm not sure that, that we do, but we're going to have to just watch this. But if you take out that bar and you take out this low and you take out the lower low from yesterday and you take out this gap fill where you stopped at, you're going to have a problem. But you're setting up here technically to make a real decision, because I'm getting this doji and then it's going to be 230 and then he's going to speak, right? So you're going to have a pretty easy understanding of which way the market's setting up to go. So keep that in mind for what it's worth. Now, was the last unanimous? No, but but this is the first decline that we've had. Last one was not unanimous. This one is. I didn't know Putin had a speech today. Yeah, I think it's holding up well. I think solar is holding up really well. So it depends what he says. If they raise the terminal rate, it'll be an issue. If he raises the terminal rate, it will be an issue. Can you take a look at ERY? Sure. I'm basically just sitting here waiting, ERY, and going from there. So, yeah, I mean, you're just hanging right in there. I mean, I think this looks great personally, but you're hanging right in there. I don't really see it breaking down. You did the undercut and then rallied. And I think that you can rally with the market to some extent. Like if the market's good, and because you're looking at recessionary times, dependent upon his speeches, energy will sell down. So just keep that in mind. So, we don't really have anything definitive here yet. So let's just, let's see what he says and not speculate. Just wait. See what he's got. Yeah, I think the terminal rate is going up. That's what I think. With the way the Fed swaps moved, I think terminal rate's going higher. But what you do is sort by sector. So what you do is you sort by sector. So here, this is the way that I always look at the sectors and go from there. Let me just throw this out there. Hold on one second. Why are you giving me that hard time? There we go. Bear with me 1 second here. And you just click on this. And then what you do is you look at your sectors. So who's really taking the brunt right now? It is consumer discretionary. They think they're going to kill the consumer, which does make sense. Tech is having a bad time now, basic materials. And you're seeing utilities being bought, which makes absolutely no sense. Why are you buying utilities if rates are going higher? That makes no sense. Right? You have a lot of disconnects here right now. So utilities should be plummeting, frankly, if they think that. Instead, I'm watching other sectors start to rally. REITs should be getting killed, right? They should be getting slaughtered. These kinds of names should be getting crushed. Toll. We're not really seeing that yet. So again, let's see what he says and we'll go from there. But we're not really, I'm not really seeing anything that's got me really concerned here. So you really want to watch these patterns now. So if you start breaking down on these, you're probably going, you're probably going to have a problem, right? You're starting to do that a little bit here on some of these patterns. So you're just going to want to watch them and see how they act, but that's not ideal. It's not really where I want to, where I want to be. So let's just see how this goes. But see how this plays out. I would have thought you'd have some kind of rally into his speech, something, but you really have nothing. This looks like it's going to fall off a cliff. Frankly, Apple looks like it's going to fall off a cliff. If you break through that and you're already through, so this is always what you want to look for, right? So let me give you just a really quick tip, and we're going to get rid of this, and I'm going to get rid of volume because I don't really need it right now, right? So there's your level, and you didn't break that gap fill, right? Here you are on Apple, okay, and you already broke your gap fill. So that tells you which one's weaker, right? So that's already telling you what's weaker. And what you're going to do is just watch this. See, they're playing these games. You're breaking down, but you're not really breaking. So let's just see how this plays out. Go from there. So far, nothing of consequence. Okay, so we got the podium up, and here we go. So I'm going to leave this on, and I'm going to turn it off as it goes.
Good afternoon.
Here we go. Let's get to it.
Before I go into the details of today's meeting, I'd like to underscore for the American people that we understand the hardship that high inflation is causing, and that we are strongly committed to bringing inflation back down to our 2% goal. Over the course of the year, we've taken forceful actions to tighten the stance of monetary policy. We've covered a lot of ground, and the full effects of our rapid tightening so far are yet to be felt.
Okay, that's a good statement.
Even so, we have more work to do. Price stability is the responsibility of the Federal Reserve and serves as the bedrock of our economy. Without price stability, the economy doesn't work for anyone. In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all. Today, the FOMC raised our policy interest rate by 0.5 percentage point. We continue to anticipate that ongoing increases will be appropriate in order to attain a stance of monetary policy that is sufficiently restrictive to return inflation to 2% over time. In addition, we're continuing the process of significantly reducing the size of our balance sheet. Restoring price stability will likely require maintaining a restrictive policy stance for some time. I'll have more to say about today's monetary policy actions after briefly reviewing economic developments. The U.S. economy has slowed significantly from last year's rapid pace. Although real GDP rose at a pace of 2.9% last quarter, it is roughly unchanged through the first 3 quarters of this year. Recent indicators point to modest growth of spending and production this quarter. Growth in consumer spending has slowed from last year's rapid pace, in part reflecting lower real disposable income and tighter financial conditions. Activity in the housing sector has weakened significantly, largely reflecting higher mortgage rates. Higher interest rates and slower output growth.
So it's getting worse.
Appear to be weighing on business fixed investment. As shown in our summary of economic projections, the median projection for real GDP growth stands at just 0.5% this year and next, well below the median estimate of the longer run normal growth rate. Despite the slowdown in growth, the labor market remains extremely
It's
tight,
not really
with the
good.
unemployment rate near a
You're starting to
50-year
crack.
job vacancies still very high, and wage growth elevated. Job gains have been robust, with employment rising by an average of 272,000 jobs per month over the last 3 months.
There goes Apple.
Although job vacancies have moved below their highs and the pace of job gains
Market
has slowed
cracking
from
here.
earlier in the year. The labor market continues to be out of balance, with demand substantially exceeding the supply of available work.
So the labor is definitely an issue.
The labor force participation rate is little changed since the beginning of the year. FOMC participants expect supply and demand conditions in the labor market to come into better balance over time.
So this probably gets worse.
On wages and prices.
I have no interest really in selling into this.
Projection in the S&P for the unemployment rate rises to 4.6% at the end of next year. Inflation remains well above our longer run goal of 2%. Over the 12 months ending in October, total PCE prices rose 6%. Excluding the volatile food and energy categories, core PCE prices rose 5%. In November, the 12-month change in the CPI was 7.1%, and the change in the core CPI was 6%. The inflation data received so far for October and November show a welcome reduction in the monthly pace of price increases. But it will take substantially more evidence to give confidence that inflation is on a sustained downward path. Price pressures remain evident across a broad range of goods and services. Russia's war against Ukraine.
So you want to watch here,
energy and food,
because if you reverse and you crack here, then you're going to go lower on the indexes. Until then, just watch.
Total PCE inflation is 5.6% this year and falls to 3.1% next year, 2.5% in 2024, and 2.1% in 2025. Participants continue to see risks to inflation as weighted to the upside. Despite elevated inflation, longer-term inflation.
So he's talking about an elevated, talking a little bit, he's going to elevate the terminal rate, which is what happened with the Fed swap. So he's basically confirming what we know, and that's why you're seeing
As
weakness.
well as measures from financial markets. But that is not grounds for complacency. The longer the current bout of high inflation continues, the greater the chance that expectations of higher inflation will become entrenched. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We are highly attentive to the risks that high inflation poses to both sides of our mandate, and we are strongly committed to returning inflation to our 2% objective. At today's meeting, the committee raised the target range for the federal funds rate by a 0.5 percentage point, bringing the target range to 4.25% to 4.5%. And we are continuing the process of significantly reducing the size of our balance sheet. With today's action, we have raised interest rates by 4.25 percentage points.
So you're trying to climb here.
We continue to anticipate that ongoing increases in the target range for the federal funds rate will be appropriate in order to attain a stance of monetary policy that is sufficiently restrictive to return inflation to 2% over time. Over the course of the year, financial conditions have
Still have a kind of bear flag here on some of these moves, so just be careful.
Conditions fluctuate in the short term.
H's, bear flags, just see them actually start to break out before, you would get involved.
The policy restraint that we're putting in place.
This doji's interesting.
2%. We are seeing
there it
effects
goes.
on demand in the most interest-sensitive sectors of the economy, such as housing. It will take time, however,
Yeah,
for the
starting to
full
push
effects
here.
of monetary restraint to be realized, especially on inflation. In light of the cumulative tightening of monetary policy and the lags with which monetary policy affects economic activity and inflation, the committee decided to raise interest rates by 50 basis points today, a step down from the 75 basis point pace seen over the previous 4 meetings. Of course, 50 basis points is still a historically large increase, and we still have some ways to go. As shown in the SEP, the median projection for the appropriate level of the federal funds rate is 5.1% at the end of next year, a 0.5 percentage point higher than projected in September. The median projection is 4.1% at the end of 2024 and 3.1% at the end of 2025, still above the median estimate of its longer run.
So you're forming these H's. The question is, do you form these H's and roll, or are you going to rally?
Where the economy will be a year or more from now.
Now it looks to me like you're going to try and push, but
Depend on the totality of incoming data and their implications for the outlook for economic activity and inflation.
let's see.
And we will continue to make our decisions meeting by meeting and communicate our thinking.
The first lower low will be your real test.
We're taking forceful steps to moderate.
You haven't made it yet. You haven't had a lower low yet.
Our overarching focus is using our tools to bring inflation back down to our 2% goal and to keep longer-term inflation expectations well anchored. Reducing inflation is likely to require a sustained period of below-trend growth and some softening of labor market conditions. Restoring price stability is essential to set the stage for achieving.
So that's your first lower low there on Apple.
The historical record cautions strongly against prematurely loosening.
So let's see how that goes.
We will stay the course until the job is done. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I will look forward to your questions.
It's not awful.
Steve Leisman, CNBC. Thanks for taking my question, Mr. Chairman. You just talked about the importance of market conditions reflecting the policy restraint you put in place. Since the November meeting, the 10-year has declined by 60 basis points. Mortgage rates have come down. High yield credit spreads have come in. The economy's accelerated, and the stock market's up 6%. is this loosening of financial conditions a problem for the?
So maybe it's not as bad as people think. I don't know. I'm not really crazy about what he said there, but since his speech ended, we rallied. So
as I mentioned, it is important that overall financial conditions continue to reflect the policy restraint that we're putting in place to bring inflation down to 2%. We think that financial conditions have tightened significantly in the past year, but our policy actions work through financial conditions, and those in turn affect economic activity, the labor market, and inflation. So what we control is our policy moves and the communications that we make. Financial conditions both anticipate and react to our actions. I would add.
yeah, they're not, you just kind of had this little move up and then it just kind of deflated. So let's just see here.
And many things, of course, move financial conditions.
Yeah, now you're dropping straight down.
I would say it's our judgment today that we're not at a sufficiently restrictive policy stance yet, which is why we say that we would expect that ongoing hikes would be appropriate. And I would point you to the SEP again for our current assessment of what that peak level will be. As you will have seen, 19 people filled out the SEP this time, and 17 of those 19 wrote down a peak rate of 5% or more, in the fives. So that's our best assessment today for what we think the peak rate will be. You will also know that at each subsequent SEP during the course of this
Yeah, I just don't think you're going to stand still. I think you're either going to rally substantially or you're going to fall off a cliff here.
The SEP that were published shows again that overwhelmingly
Stagnant, I just don't see stagnant as the de facto standard.
I can't tell you confidently that we won't move up our estimate of the peak rate again at the next SEP. I don't know what we'll do. It will depend on future data. What we're writing down today is our best estimate of what we think that peak rate will be based on what we know. Obviously, if the inflation data come in worse, that could move up, and it could move down if inflation data are softer.
Gene Smith with New York Times. Thanks for taking our questions. The SEP, like you mentioned, suggests that the Fed will be making another 3/4 percentage points worth of rate increases in 2023. I wonder if you would foresee that being in 25 basis point increments, 50 basis point increments, sort of how you see the speed playing out going forward?
That's actually a good
Kind of
question.
what you're looking at as you determine when to stop.
As I've been saying, as we've gone through the course of this year, as we lifted off and got into the course of the year, and we saw how strong inflation was and persistent, it was very important to move quickly. In fact, the speed, the pace with which we're moving was the most important thing. I think now that we're coming to the end of this year, we've raised 425 basis points this year, and we're into restricted territory. It's now not so important how fast we go. It's far more important to think.
So I don't know. I'd be really careful here. I'd be really careful on both sides. I don't see anything clear, crystal clear here at all.
So, and that applies to February as well.
So his comment there really tells you that they might just do 25 basis points next and then see how it goes. I mean, the market's moving up on that. So he's basically telling you like, hey, I might only do 25 basis points. So the market did move up on that comment, on that question. But every rally that we're having where you should be making a decisive move, we're fading. So when I see this, like these dojis, I have to respect that, right? Just the way that I trade. And I'm seeing them over and over again that this is happening. So I kind of have to respect that, right? And see how this is going to play itself out. So for now, I would just hold off until you get a real clear reading here. I mean, we're not getting the clearest reading in the world from him at all. So, let's just see how this plays out here. But you're getting some definitive bars that you can at least trade around those bars and use as guides. Like, do you really want to buy this before you get back over 400? Probably not. But you might get over 400 again. So maybe that's something to, to think about. So, I just think that you just have to really slow your roll here and see how this plays itself out. I don't see anything definitive at all here. I was really hoping for him to either crush us or, get out of the way. And he's basically not doing either right now. So, just keep that in mind. Let's just see how it goes. But I don't see anything here that is telling me that I got to lean one way or another right now. If I had to speak technically, this was your breakdown bar from when he started, right? And he said something, and you've been unable to get above that. So if you were looking for a level, I mean, there's your, it doesn't really get much cleaner than that as a level, right? So that's kind of how I'm viewing it right now. So, let's just, let's see how this goes and we'll go from there. But now you are getting these rising wedges right here. So let's watch those and see how that plays out. But that you are getting those. Now, whether or not you start cracking them, I don't know. Let's listen to the questions for a little bit longer and see if we get some more color.
The goods inflation has turned pretty quickly now after not turning at all for a year and a half. Now it seems to be turning. But there's an expectation really that the services inflation will not move down so quickly, so that we'll have to stay at it. So we may have to raise rates higher to get to where we want to go. And that's really why we are writing down those high rates and why we're expecting that they'll have to remain high for a time.
Howard Schneider with Reuters. Thanks for taking the question. You described GDP growth in the SEPs as moderate or modest, I believe. Yet it's really approaching stall speed. 0.5 percentage point is not much. You described labor market unemployment rate as representing some softening, but it's nearly a full percentage point rise, and that's well in excess of what has historically been associated with recession. Why wouldn't this be considered a recessionary projection by the Fed?
Well, I'll tell you what the projection is. I don't think
Let's just see here for a moment.
You've got positive growth. The expectations in the SEP are basically, as you said, which is we've got growth at a modest level, which is to say about 0.5 percentage point. That's positive growth. It's slow growth. It's well below trend. It's not going to feel like a boom. It's going to feel like very slow growth, right? In that condition, labor market conditions are softening a bit. Unemployment does go up a bit. I would say that many analysts believe that the natural rate of unemployment is actually.
Let's take a look at what's going on here real quick. See if we're getting anywhere at all on any of this.
We can never identify its location with great precision.
Let's keep watching. So you are cracking here a little bit.
If you look, you've got the reports we get from the field.
Kind of tripping over his words there, isn't he?
Companies are very.
It's not really going to inspire a lot of confidence. Let's just see how this goes.
Generally, companies want to hold on to the workers they have because it's been very, very hard to hire. So, and you've got all these vacancies out there far in excess of the number of employed people. That doesn't sound like a labor market where a lot of people will need to be put out of work. So that there are channels through which the labor market can come back into balance with relatively modest increases in unemployment, we believe. None of that is guaranteed, but that.
And they're going to bounce again. Yeah, you have these huge bounces, and then you're just falling right out of bed. That's actually scarier to me than if we would rally. To be honest with you.
Before the past two CPI reports showed inflation decelerating in line.
So let's see how this goes. It seems like we're getting buying stepping in, but and then the bottom just falls right out.
All things equal, you would feel more comfortable probing where the terminal rate is by moving in 25 basis point increments, including beginning at your next meeting.
So I haven't made a judgment on what size rate hike to make at the last meeting. But what you said is broadly right, which is having moved so quickly, having now so much restraint.
So you're just having these huge, powerful moves up with no follow through. That's what we have right now.
That will allow us to feel our way and and get to that level, we think, and better balance the risks that we face. So that's the idea. It makes a lot of sense, it seems to me, particularly if you consider how far we've come. But again, I can't tell you today what the actual size of that will be. It will depend on a variety of factors, including the incoming data in particular, state of the economy and state of financial conditions.
See, I mean, you literally run up and they just sweep the leg. So you just, before you jump in here, just be really careful.
No, as a just a matter of
Let's take a look at the VIX, see what's going on there. So this is still our peak.
that comes out during the meeting, and participants.
So we're not taking out lows.
Candidates that they can make changes to the S&P during the meeting, well in advance of the press conference, so that we're not running around. But that's not the case. It's never the case that the SEPs don't reflect an important piece of data that came in on the first day of the meeting.
Hi, Chair Powell, Rachel Siegel from the Washington Post. Thank you for taking our questions. I'm wondering if you could talk about the projection for the unemployment rate. Why has the Fed raised its unemployment projection? Is it because the model suggests that a higher terminal rate would automatically cause a higher unemployment rate? Or are you seeing signs that the labor market isn't quite as strong as you think it is now? Thanks.
No, it's not about the strength of the labor market. The labor market is clearly very strong. It is more just that.
So what we're doing is running up and then they're just knocking us down. So let's see how this goes here. I don't see, so far you've been in this range the whole time. You really have not moved a lot here. You just haven't.
Between this meeting and September meeting, you see the fact that we made less progress than expected on inflation. So
Let's see if we can get some kind of direction before.
Unemployment goes up because we're having to tighten policy more. And so it didn't go up by much in the meeting, I don't think, but that's the idea, is slower progress on inflation, tighter policy, probably higher rates.
So like every move down, you're not having follow through really.
Restriction that you need to get inflation down to 2%.
In order to get to that number, how much of that could be caused by layoffs versus vacancies trimming or changes to the labor force population rate?
It's very hard to say.
I mean, he's not saying he's going to do 50 basis points next time. You would think you'd get some relief on that, but you're not getting it.
The declines in unemployment would be more meaningful, I think, than what you see written down there. But why do we think that is the case? I'll give you a few reasons. First, just is that there's this huge overhang of vacancies, meaning that vacancies can come down a fair amount, and we're hearing from many companies that they don't want to lay people off, so that they'll keep people because it's been so hard. And I think it feels like we have a structural labor shortage out there where there are 4 million fewer people, a little more than 4 million, who are in the workforce available to work than there's demand for workforce. So the fact that there's a strong labor market, means that companies will hold on to workers.
So we have here.
It may take longer, but it also means that the costs.
Yeah, that's just crazy.
Again, that we're going to find out empirically, but I think that's a reasonably possible outcome, and you do hear.
I think you got. I think you have to just watch what happens here. I don't view this as he's starting to be a little more positive. You're starting to see like these REITs starting to turn around a little bit, but just watch this. Right, so here we go. Starting to see it. I don't know if this continues or not, but right now I don't see any reason to do anything. I just don't, I just.
One of the reasons it went up was that core came in stronger this year.
So see what happens here. I'll listen for another 5-10 minutes, and then we'll kill it. But I mean, the gist is out, right? So now the question is, are we going to go up on this? Well, if we start to look at this pattern, hold on one second. If we start to look at these patterns, you're making higher lows. So we kind of want to watch that, right? I mean, this is what I see so far. Now, it doesn't mean that you've gotten through this level emphatically yet, but that's what you're starting to see, right? Across the board. So I'd want to see something definitive here before, acting. And I don't have anything definitive right now. So let's just let's wait till we see something that makes sense, that actually looks definitive. But all you're doing is just bouncing in this area over and over again on all these names. I mean, you're within $1. You're within 30. So this entire time we've basically been within 30 basis points. It's just silly. see how this plays out and go from there. But Exxon's coming in a little bit here. Here goes Microsoft, because now Microsoft's green. I mean, this looks like it's getting tighter. Apple looks like it's getting tighter to me. So just watch, stay out of the way until this settles itself down. But it seems like we're getting a direction. You're going to want some kind of direction before you move here. Let's see how he's answering this.
It's not on rate cuts. And we think that we'll have to maintain a restrictive stance of policy for some time. Historical experience cautions strongly against prematurely loosening policy. I guess I would say it this way. I wouldn't see us considering rate cuts until the committee is confident that inflation is moving down to 2% in a sustained way. So that's the test of it. And you're correct. There are not rate cuts in the SEP for 2023.
Steve Matthews with Bloomberg. Let me ask you about China. In the last few weeks, China has abandoned its COVID policy and been reopening pretty strongly. I'm wondering if you see that as disinflationary because you're seeing supply chains improve, or inflationary because it obviously brings a lot more demand globally, improves the global outlook for growth and for.
All right. So it's really a nothing burger, in my opinion. I'm really kind of surprised, to be honest with you. I see a trend line right here, and I don't really see a need to rush into and do anything in here. We have the VIX dropping. You are seeing some money go into some of these names, but I would just be super careful until we see what's going to happen here. Yeah, I would be really careful with names like First Solar, and I'd be leaning more towards the liquid names, but we're not seeing anything yet. So let's see what happens here with volume and see if we get some interest in these names and kind of go from there. But I'd be very apprehensive to do anything until you start seeing the actual, money pour into leaders. So kind of a nothing burger on the day, to say the least. Yeah, AXSM looks pretty good. So, I mean, it just kind of hangs in there, just really to care. But if I had to lean, I would think if I had to lean one way, it looks to me like we're going to grind higher. But we're going to have to see if it does. I mean, right now it's not, we're not getting any real action here. So, but it seems to me like it wants to at least try to grind higher, but let's see how that plays itself out. I'm really kind of surprised that you started to roll and break here and then just didn't go. So, let's see how this plays itself out. You're starting to see some money come into the market. We're just going to have to, kind of see how that goes. But I just don't see a whole sense in doing a heck of a lot here just yet until you get some real firm readings, because you pop over and then they just knock you right back down. Like you get these dojis, but then you don't go anywhere. So it's very, very disconcerting in the way that they're going. Yeah, Seema, I agree with that. I agree with your assessment. Like I see Apple getting tighter. I do, but I also see it unable to get above this breakdown bar. which is troubling, right? But I do see this. Well, you're from here, you can go over and see it. But I do see this, but it's not really what I want to see. So, for now, I would just I just stay out of the way. I mean, you're not really missing much by just waiting for this to settle itself out. So we'll go from there. And yeah, that's what I'm saying. Like even the Qs, right? Like I saw that. Hold on, let me get to it. So you have this down here, but look, but you're still in this range, right? So you're still here. So you're trying to see if you're going to flip something so that you can put something on. And I just don't see anything like that yet. So, let's watch and see how this plays itself out. And, maybe it starts to happen. We see money come into the market and start buying some of these, but for right now, we're just not really seeing any action here that would, warrant doing anything. So, at all. So, all right, everybody, have a great day. I'll put out a video tonight on, how this finishes and what to do and what I'll be looking for tomorrow. Have a great day, everyone.